All right. All right. All right. Good evening, traders, or good afternoon, good morning, wherever you're watching me from. Welcome to today's live trading session with Octa. My name is Ambrose Ebuka. Now, before we start, cooking with the charts today, before we even go over to the economic calendar, let's warm up the room a bit. Let me know in the chat where you're watching me from. You can tell me your name as well. You can tell me your name and where you're watching me from: Lagos, Abuja, Port Harcourt, South Africa, India, wherever it is. Let me know in the charts. Or maybe you're watching from school, from your workplace, or even on bed right now. I just want to see everyone in action today. So let me know in the chat, guys. And if this is your first time joining us, you can also go ahead and type first time in the chat so I can also give you the warmest welcome. And trust me, you've joined a space where, we don't just trade and analyze, we also grow as well. But yeah, welcome everybody. And go ahead and let me know in the chat your name and where you're watching me from. I'm going to run through this disclaimer and then we're going to get started. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general markets commentary and does not constitute investment advice. Now, before I even go ahead to talk about myself, let me tell you guys why this session is important, why today is important, this evening is important. Now, I know that sometimes you've opened trades, everything looked good, and then within seconds or even minutes, the price just took off in the opposite direction. You probably didn't see it coming, right? It has happened to me a lot of times in my early days of trading. And most times, it's not really your strategy failing. It's the fact that something happened in the market that you did not know about. And the thing, that something was probably the economic calendar days or even weeks before that you would have planned for. And we're going to talk about that in today's session as well. My name is Ambrose Ebuka. For those of you that don't know me, this is just a brief intro on who I am or to who I am. I have 6 years experience in the markets. I trade with precision and I combine swing and scalp trading to stay consistently informed in the Forex market. I mostly trade gold, GBP/JPY, and GBP/USD instruments where I hit above 85% accuracy and backtext these pairs to stay sharp in this market. I'm going to look at the comments now to see who we have in the session today. Welcome, everybody. Kathy from India, welcome. Chigo from Abuja. Chigo, welcome to this session. Welcome, everybody. All right, today's agenda. First, we're going to look at the economic calendar. I would walk you guys through that for those of you that don't know how to use it. We'll talk about zone trading as well. I'll introduce you guys to the strategy that I use, which is the zone trading strategy. We'll look at the dollar index, DXY, which is, what you should use to identify the strength and weakness of these major currencies that are paired with the dollar. I'll also explain that to you guys in this session. We'll also talk about psychology of trading and how you can trade with clarity. I would have a Q&A session at the end of today's live trading session. All right, we'll have a Q&A section where I ask you questions, and I can also take your questions as well if you have questions. The session is going to be for about 45 minutes, and I'm constantly looking at the YouTube live chat to see if you guys have any questions. So if you've got any questions, please use the YouTube live chat, ask me your questions. I'll be happy to answer your questions because I would also be checking as well. Like I said, we're going to be talking about clarity in trading before entry. You know how you wouldn't just get on the road and start a road trip without checking your fuel. You wouldn't make a meal without looking at the ingredients that you have. That's the same way you shouldn't enter the Forex market or enter a trade without knowing exactly what could move the market. And by the end of this session, you will understand exactly how to use the right tools, not just the economic calendar, major tools that you would need with the technical analysis as well, my strategy, the zone trading strategy, to make confident and informed entries. Okay, so after today, there'll be no more trading on vibes and screenshots. You would have a rhythm, you won't rush, you would have a structure to analyzing the financial markets. But again, if you're ready, please let me know in the chat. We're going to get started now. I see a lot of people have already joined the session, so we're going to get started, and this session is literally for you guys. So just a walkthrough on the zone trading strategy. Before I go ahead to even define this, let me know in the chat, how many of you have heard about zone trading? If you've heard about zone trading, let me know in the chat. Maybe come across it from a news, maybe not news, but an analytics page somewhere on the internet, a video. If you've heard about zone trading, let me know in the chat. Okay, I've not. I see some people still joining. Alan from Lagos, welcome. Okay, so brief introduction, right? Now, imagine the Forex market is like a battlefield between the buyers and the sellers. And I love to use this explanation because it helps people understand how the market is just transitioning from supply and demand. That's majorly what happens. Yes, there could be consolidations, there could be retracements, there could be ranges, but the general movement of the market is just supply and demand, right? Now, imagine the market is just a battlefield, right, between the buyers and the sellers. Now, here's where zone trading comes in. Instead of trying to predict every move, every candlestick, with zone trading, you're able to focus on the areas where buy and sell would clash. And they are not a single line or a single price points. They are ranges, they are zones. You can call them area of interest, territory of interest, but big moves tend to happen here. Either you get a breakout or a bounce. I'm going to show you guys exactly what I mean by that. And this was, I hope you guys are actually in the Octa Nigeria Telegram chat because we called out this trade idea, I think it was 2 days ago. We called out this trade idea on GBP JPY, and I mean, it has retraced now, but it has smashed our first TP, second TP, was almost close to hitting the last TP, but retraced. And one of the things that you can take advantage of with Octa is what we call a trailing stop. You can get that with your Octa account, where when you enter a trade, you set your trailing stop to follow the trades in profit. So even if the market reverses, you don't get to lose all this money, right? You can take out your profit here, take out your profits here. It just has a specific point where it's imputed, or it's just there static. Even if the market reverses, you don't get to, it locks in an amount of profit for you. But I'm just talking about this because this was the trade we took. Really beautiful trade. Let's see how many pips was this. It should have been about 834, 835 pips approximately. Good, nice trade. So if you want to get these trade ideas, please do well to join the Octa Nigeria Telegram chat. The link is going to be in the description and in the live chat as well. Yeah, but back to it, zone trading, right? I'm going to go to the higher time frames because this is the 5 minutes time frame. I'm going to go to the daily time frame. And if you don't know what that is, what I just did was to zoom out from the noise of the market, right? I call it noise because if you look, we're on the daily time frame. It's pretty clear the direction of the market right now. And what this means is every single candlestick you see here opened and closed in a day. right? So this candlestick opened and closed in a day, the next one opened and closed in a day. If you want to switch to, let's say, the 5 minutes time frame, what it means is every single candlestick in the 5 minutes time frame opened and closed within 5 minutes. All right, so now we are seeing a lot of market noise here. The movements are so much. We're going from downtrend to uptrend. You know, you wouldn't get clear market movement here. You wouldn't get clear market direction here. You wouldn't get the clear interpretation of the market here. You want to go to the higher time frames, like the daily or even the monthly, you know. But today we're going to start with the daily. We already have these zones mapped out on the monthly time frame. Pretty clear, pretty obvious. Except you're a swing trader, you shouldn't be, you know, trading on the monthly time frame. You can just use it for identification of key levels, key zones, just like I did here, as you can see. Just identify the major points where, just like we have this resistance zone here where price has now successfully broken above. Just for the major points, this is the monthly time frame, right? We're seeing that this month of August, GBP/JPY has been really bullish. So if you know what you're doing in this market, or if you just understand supply and demand and understand market movement, you would know for sure that you shouldn't be looking for sell opportunities here. Because from the start of the month, we've been pretty bullish, and this bullish candlestick is not just starting. This bullish candlestick is a pullback, a major pullback that has taken the GBP/JPY market above this key level. Massive pullback. Remember, let me show you guys something, right? If you look at previous times, this was October last year, November, you see that GBP/JPY market pushed to this resistance, but it came back down. For every time it tried to go up, we saw it push back down. For every time it came to this resistance level, we saw a minor retracement. It tried again, minor retracement. It was pushed down. And this month, we're seeing that it has now successfully broken above this level. We have technically, right, based on our technical analysis, we don't have any reason to be selling GBP/JPY at this point, right? What we can just do is to look out for pullbacks, which I'm going to show you guys now in the lower time frames. And that's why it's important to understand zone trading and the dynamic of the market from supply to demand. Because if you understand this, all you need to do is to just go to the lower time frames and wait for the market to make pullbacks, and you get into your buy trades. You've already seen on the higher time frame that GBP/JPY is pretty bullish. There, you can take sell trades, yes, but it's going to be temporal. Like the profit is not going to be much, right? You're not taking the sell trade because the market is going to start moving in a bearish direction. No, you just want to capitalize on some pullbacks and some profits. But the overall trend is pretty bullish. All right. So I'm going to zoom out. This is the daily time frame now. And you can see here that all you had to do was wait for a pullback buy, wait for a pullback buy. As a matter of fact, if you even traded when the market made some retest on these trend lines, you would have made good profit. Another pullback here, obviously your understanding of supply and demand, your understanding of trading in the zone would give you the indication that this market just pulled back into a key level that we can trace. We already have it over here. So all we have to do is just extend this. Boom. You can see pullback, buy. This is an area of interest for GBP market. Pullback, buy, pullback, and buy. Remember what we did? We went to the multi-time frame first, identify momentum of GBP. I'll also show you guys how to do this fundamentally as well with economic events, how to read the news and understand the projected direction of a pair. But technically, we can see that GBP/JPY is pretty bullish. And as you can see, we have successfully broken above this resistance and also this daily time frame resistance as well. We're now trading slightly above it. If we sustain that break above, all you have to do is to wait for another retracement that takes us back into, let's see, that takes us back into these zones, and then we start to look for buy opportunities again. Remember, when you're in an uptrend, I believe we all know what uptrends are. When you're in an uptrend, you don't start to trade confidently on reversals until the market has shown you signs of reversals. clearly we are in an uptrend from the monthly, and now we're on the daily time frame. Clearly uptrend, right? So if you want to trade an uptrend, you just wait for pullbacks and capitalize on that, which is what we'll be doing here. If GBP/JPY successfully maintains this position above this resistance level, you just wait for a pullback into one of these key levels that I've mapped out. I think I should just indicate the zones for you guys, just so that after this session, you can check it out yourself. So we have this zone. Let's call that 19 to 198.5. And then we also have this one as well. I think we're going to bring this down a bit. Yeah, 198.5 to 197.5. And then we also have this one here, 195 to 196. If you're going to be trading key levels and trading territories of interest, you don't just look at a specific price point. Remember, I gave you guys the definition of zone trading, and I told you it's not about specific price points like, say, oh, 195 is the place. You look at the zones. The zones can be 100 pips. But now you know that you're monitoring that 100 pips to see how the market reacts there, and then you trade. Okay, you can use any strategy you want to use, but if you're using zone trading, you don't look at price points as figures, you look at them as zones, right? So you can say from here to here, you want to see a reaction. You cannot just say you want to see a reaction at this point or at this point. You look at the zone and say you want to see the market bounce here before you take it to the upside, or you want to see the market bounce here before you take it to the upside. If we successfully break above this resistance on GBP/JPY, expect a pullback and more buy momentum from that pullback. If you see the momentum to the upside, take the trade. All right, I've given you guys the indication of where I'll be comfortable. Guys, I've been trading this for a very long time. You can see these levels have been mapped out for a very long time, and I'll tell you for a fact that the market respects these key levels most of the time. You can see it happen. You can take this all the way back. You can see how the market has been respecting all these key levels. So that is my bias on GBP/JPY, and I've also used that medium to explain to you guys how the zone trading works briefly. So now I'm going to just tell you guys what is included in the strategy, who it's for, and how and when you can use it. All right, let me know in the chat if you guys are following the session. Let me know in the chat if you guys are following the session. If you're following the session, please let me know in the chat. You can say I'm following or following. Just want to be sure before we get into the next thing. Malaka from South Africa says it's their first time. Welcome, Hendrik Malaka. Welcome to the session. And for those of you that said, we also have Pona from South Africa as well. Welcome. For those of you that said you've not heard about the zone trading strategy, let me know in the chat if you understand it now. Now that you've heard about it and you've seen how it works, let me know in the chat if you understand it. Now, this is just, I would say, a primary means of understanding the market, right? You can still use important indicators for confirmation, like the moving average, the Fibonacci, and the RSI. Those are the indicators that I use for extra confirmation. You also need to understand candlestick momentum. You also need to understand areas of liquidity as well. And then when you combine this, your key levels are just easy to, or simple to execute from. But first, you must understand how these key levels work and how the market transitions from levels of supply to levels of demand constantly. It's a constant, transmission from supply to demand. Sometimes we could get what I would call consolidation, just like you have here. Let me make this a bit dark, right? Something like this. You could get a slowdown in the market, but again, back to demand zone, boom, back to supply zone. So it's just a constant transmission of supply and demand. All right, everybody's following. Perfect, perfect, perfect. So what is this? What does the strategy consist of? What does the zone trading strategy consist of, right? First, your understanding of the market structure. Now, this is not just what it consists of, but it's also your framework. I like to call it that. We have the demand zone. The demand zone is the price area. Let me show you in the chart. The demand zone is the area on the chart where buying pressure is strong. When the market breaks out of a resistance level, like you have here, this resistance level becomes new support level, just like it came back to find support here and here again. So let me use supply and demand terms. When the market breaks out of supply level, that supply level can now become demand level. You can see how this was very strong for GBP/JPY. And the stronger a level is, the stronger the breakout or the bounce would be, right? You see, good bounce, good bounce. When we successfully broke out, became support, and now we're just trading above. You see how it's still strong, it's still maintaining. This level is still being maintained as a key level for the GBP/JPY market. Demand zone is where buying pressure is strong. Supply zone is where selling pressure is dominant. Just like you see how this, you guys can see I already have this mapped out already. Supply, demand, boom. So just want you guys to understand that. Then the understanding of market structure simply means being able to come into the chart and without having anything on your charts, right? Without having anything on your chart, you just know that this market is moving upwards. Without having any drawing, any indicator, anything, you just know that this is an uptrend. Being able to perceive the market instantly, trend-wise, okay? I'm not saying you should be a magician, but trend-wise, right? Being able to do that is what I mean by understanding the market structure. That also includes identifying candlestick patterns, the trends, if it's ranging, levels of supply and demand, and then you want to identify key levels, right? These key levels are these levels that I have here. You see all these lines. Every single line you see here mean something important. This is a major level for me. The ones in between that I read, I call them my minor levels because there has been market interaction here. These are levels of interest for me, but they're just minor because they are in between major supply and demand. What this means is if GBP/JPY is going to come back down to this point at any point in time, most of these levels will be respected. You use what's happening on the left-hand side to understand what could happen on the right-hand side. All right. So the key levels include usage of trend lines, like you can see here. Trend lines, your horizontal lines to identify areas of support and resistance. You can also use moving averages and Fibonacci as well for key levels, just added confirmation. And for the entries, let's go back to that. You want to identify your entry and exit points. Actually, not identify, but predetermine in terms of identifying and predetermining where you want to enter and where you want to exit. A lot of times we just take trades, we don't even know where we want to exit that trade from. Let me know in the chat if you guys can hear me. I think okay. I think it's pretty good. But let me know, guys. I think it just went off for a second. I want to be sure that you guys can hear me clearly. Guys, let me know in the chat if you guys can hear me clearly. Are we good to go? Guys, if you can hear me, please let me know in the chat. I'm getting feedback from my other device where I'm watching the stream and it's a bit slow, so I want to be sure if it's from my end or just want to be sure if you guys can hear me. Okay, perfect, perfect, perfect. All right, so a lot of times traders just enter trades without identifying where they want to exit. They let the amount that they want to make from that trade determine their exit points. Let me give you an example, right? A beginner trader can be on this trade now and say, well, I want to place a buy trade over here. This is just an example, right? I want to place a buy trade over here, a buy limit. I want to take profit here. Obviously, most recent swing for my targets. If the market moves past this place, there'll be more targets for me to the upside. And that's it. They just enter the trade. And when they start to make profits, they let the amount they make from that trade determine when they will close. They now neglect the initial plan of executing or exiting the trade at resistance, exiting the trade at based on market condition. So sometimes you would see the profits that you're making would make you give a blind eye to what's going on in the market, and you say, well, I'm making $200, I could make 500, so let me just allow it to go. The market can be showing you rejection signs, but you would ignore all that just because you want to make extra money. And that's not what you want to do. You want to identify the exit point in profit, the exit in risk as well, before you enter the trade, and you just respect it. All right. And then risk management, very important, especially if you're a beginner trader, right? Risk management is very important. Your risk to reward, your conservative use of lot sizing. And I'm saying especially if you're a beginner, because when you get into this market, yes, I know you guys hear a lot of go hard or go home. 0.01 lots would not get you a Lambo, all that. But I can tell you for a fact, if you don't manage your risk when you get started, you won't even have an edge in this market. You only play around with your risk when you know how to manage it, when you understand your risk tolerance. Okay, so you come into this market, you stay long enough to develop an edge and develop confidence. That's the most important thing for a beginner trader. Money is going to come when you have a working strategy. Money is going to come when you have a working strategy. Money is going to come when you have an edge. Money is going to come when you're able to manage your risk. And then you can say, well, this is what works for me. I can now play around with this and that. But if you're just coming into this market and you're executing trades without knowing how much you want to risk, you just want to trade on vibes and place trades and just hope for the best, you might not stay long to develop an edge in this market. Okay, so risk management is very important. When you understand that, then you can begin to, play around with your risk and all that. All right. What kind of trader is this suitable for? The strategy works on all time frames. And the reason is because in every single time frame you go to, you would see a zone, right? Let's try it out. You go to the monthly. Go to the monthly time frame. These are all zones. We already have one here as well. We already have one here as well. These are all zones, right? I could go on, and I know some of you guys are going to be asking, oh, how do I map my zones? How do I identify level of supply and demand? Guys, it's pretty simple, right? You just have to look and spot it. If you have to second guess it, it's not there. Identify the ones you can spot quickly first, the ones that are obvious, the ones that are clear. When you're done, you now come in between to start looking at these minor ones, looking at these ones in the middle and all that, and this one's here as well. And connect this from here, so you can see it's less than 30 seconds. I've been able to identify major levels, and this was the monthly time frame. If I now go to the weekly time frame, we still have zones here. If I go to the 15 minutes time frame, we still have zones. Look at zones here. You can see I can extend this like this. For the scalpers, boom, breakouts, previous resistance, turn supports, capitalize on that. No bearish momentum on this end. Bullish engulfing candlestick, momentum candlestick for confirmation and entry. I can even go lower. If I go to the 1 minute time frame as well, we still have zones. Let's take this off so we can map new ones. I'll still put it back actually. Boom. You can see very, very sweet and clear on this end, right? See this one as well. From here, now we're trading above it, and the next place we're coming to is here for a retest, right? So you see, I started from the monthly, now I'm at the 15 minutes, even to the 1 minute, we're able to identify zones on across this time frame. So the zone trading strategy works everywhere, across all time frames. Now, and for all traders as well, if you're a day trader, you're a swing scalper position, you can take advantage of it. But regardless of your trading style, do not neglect the higher time frames. Don't neglect the monthly, the daily, the weekly. That would give you a wider view, a wider perspective of the market. When do you use it? During volatile sessions. A volatile session can be when two sessions are active, right? Let's say for Nigerians, the London session opens at 9 a.m., 8 a.m., 9 a.m. Each session lasts for 9 hours. So New York session opens at 1 p.m. Now, at 1 p.m., the London session is still going to be open because it ends at 5 p.m. So from 1 p.m. to 5 p.m., when the New York session opens, both the London and the New York session will be open. The New York session is going to overlap. The London session rather would overlap into the New York session, and both of them will be open at the same time. That can bring about volatility, right? If two zones, two trading sessions are active, the banks and businesses are active in the US, banks and businesses are active in the UK, volatility can be generated from that. You can also trade it after major news events, not during, but after, because when the event is over, you get to see the clear direction of the markets. All right. So let me know in the chat if you guys now understand the zone trading strategy. And if you've got questions, please let me know in the chat as well. If you've got questions for me, please let me know in the chat. We're just going to do a brief review on the economic calendar. And this is the Octa economic calendar. For those of you that do not know, this is the Octa economic calendar. It tells you, gives you information on what's going on economically in different parts of the world and how this event affects different currencies from different part of the world as well. As you can see here, this event would obviously impact the Australian dollar, the British pound, the euro, the US dollar, the euro as well, the euro and the euro. All right. So this is how you use it. First, you need to access this from the Octa official website or through your mobile app, the Octa trading app. You access it through that. The navigation section, you'll see economic calendar. Just click on it. You come here. Now, for me, I like to focus on the high impacts just because they bring about good amount of volatility in the market. So I already know about all these other ones. If I put medium and low impact events, apply, you see we had a lot of events today, but this doesn't bring about any volatility, right? It's just for the knowledge, and I already know about them. So I'm going to focus on the ones that would bring movement to this market, because we need volatility as traders. If the market does not move, you would not make money, right? So you want to focus on where the money goes. But if you're just getting started, you can include the medium and the low so that you can just get the information, and then you start to focus on the high impact. Make sure your time range is set to today so you don't miss out on events. Your time zone as well should be set to your location. And here are the things you want to pay attention to. The impact, the previous, obviously you know the impact. So the previous, the forecast, and the actual, right? So each event, you look at the time it's going to be released, you click on it. Octa has a definition for these events, just like you have the unemployment rate for Australia. This would impact the Australian dollar as well. And as you can see, the reports are here. This is the definition, and then you have the reports. And as you can see, Australia's unemployment rate came in at 4.2%, which was exactly as expected in the forecast and slightly better than last month's, right? Why do I say it's better? Because a decrease in the figure is seen as bullish. As you can see here, this is an important part of Octa's explanation. this last sentence. A decrease in the figure is seen as bullish. And now we had a decrease. So this came out slightly better than the previous. If you don't know what the unemployment rate is, it tells us how many people are without jobs. The lower numbers means people are working, people are spending, people are keeping the economy alive. Let me give you guys an example. Imagine you have a village with 100 workers. Last month, 4.3 people did not have jobs. This month is 4.2. It's a small drop, but it shows improvement. Right? Now, because it's the same with the forecast, the Australian dollar might not have huge reaction, but as long as it's better than the previous, it's still a plus for the Australian dollar. And then we also have the employment change in July. Previous was 2K jobs, forecast was 25K jobs, and the actual came out just slightly below what was expected at 24.5K. Now, if you don't know what this is, the employment change measures how many new jobs were created in Australia last month, as you can see, the month of July. And the forecast was 25,000 jobs. Like I said, the number came out very close, 24,500. It's a big improvement compared to the previous month, you know, which still shows sign of a healthier economy. I mean, when there are more jobs, it means more spending and it can strengthen the economy, right? But like I said, the result is almost exactly as expected. It's much better than the last one. It's positive, but the market reaction might not be too crazy over the next couple of days. Then we have GDP for we have GDP for GBP, the gross domestic product. As usual, you want to click, get the definition. YOY means year over year. And this just shows you how much the UK economy grew in the last 12 months. As you can see here, the actual came out at 1.2. It was expected to be 1%, but the actual was at 1.2, which is slightly better than what was expected, even though it was a bit lower than the last time, which was 1.3%. Let me put that into perspective for you guys. Now, imagine as a farmer, you sold 1,300 pounds worth of crops or plants last year, right? 1,300 worth of plants. This year, you now sold 1,312 pounds. It's a 1.2% increase. It's not so huge, but it's still progress. And progress means confidence in the economy. All right. Okay. Let's look at the gross domestic product quarter over quarter. That's QOQ. It means, or QOQ means quarter over quarter, right? And this shows the growth compared to the last 3 months. The forecast was 0.1% growth, but we got 0.3%, which is triple the forecast, but it's still less than the last quarters, which was at 0.7%. I mean, this can give GBP small boost, but it's still slowed compared to the last quarter, right? It's still bullish for GBP. It's greater than the forecast, but it won't really have much of an impact on the GBP on the pound sterling. But it maintains the stance on pound sterling. You can see the pound sterling is bullish. If I go to the charts and show you guys, you see the pound sterling has been pretty bullish. GBP JPY is doing well. GBP USD overall doing well as expected. Let's go to the higher time frames. This is the 15 minutes. So that when you see this, you'll not say, oh, we are pretty bearish. So you can see that's bearish movement on the 15 minutes. Look at what it is on the daily time frame. It doesn't mean that GBP is bearish. This is how the lower time frames can be confusing. This is how the lower time frames can be confusing. But when you go to the higher time frames, you see the clear direction, and then you get to spot things like this. Boom. Get to spot things like this. And this as well, if you want to keep it really simple. So GBP still bullish. And then we had GDP for the euro. quarter over quarter, and year over year. Let's quickly run through that. Actual came in at 0.1%, just the same with the forecast and the previous. The same thing with the yearly as well. The year over year, previous forecast and actual came out as exactly as everyone predicted and exactly as the previous. Now, if the results match expectations, then there is usually no drama. The market only reacts when there's a surprise, either good or bad. For example, if your friend tells you, oh, you're going to score 70% in an exam, and then you came out of the exam and you scored 70%, everybody's like, yeah, right? But if they tell you, oh, you're going to score 70% and you came out and you scored 100, that gives a reaction, right? So the euro won't probably move as much because of this, unless another big news comes up. And then finally, we have the PPI for food and energy year over year. So the PPI basically measures how much prices, manufacturers, factories, just producers generally, how much they are charging for goods. And this version, as you can see, excludes food and energy because food and energy is volatile. They jump too much, they jump around too much. Anyway, the forecast was 2.9%, but now the actual is at 3.7%, which is much higher than the forecast and also much higher than last month's 2.6%. And when the inflation is high, or when the PPI is high, it means inflation pressure might be building. And the US Federal Reserve, US Central Bank, they could see this as a reason to keep the interest rate high, which is usually good for the dollar in the short term. But traders will also look at CPI before making big moves as well. All right. So this is just a brief explanation for the economic events that we had today. If you understood that, please let me know in the chat. Just so that you can, at your own time, tomorrow, next week, look at the economic events yourself. So if you understood that, let me know in the chat. If you understood that, let me know in the chat, guys. And if you have any questions for me, you can also go ahead and ask your questions. I would answer your questions. What's the purpose of TradingView, and can I use it to trade on Octa? TradingView is basically just where I analyze the charts. You can also use Octa Trader as well to conduct your analysis. The link is in the description. You can download the Octa Trading app and you can analyze there. You can also use the web version of Octa Trader. All right. Quick one. I told you guys we're going to talk briefly about clarity before entry, before we wrap up. But again, if you have questions while I talk about this, you can ask your questions in the chat. If you don't know why the market is moving, you have no business being in the trade. Now, before you think of buying or selling anything today, tomorrow, let me ask you this. Would you enter a moving bus without knowing where it's going? It sounds funny, but that's exactly what a lot of traders do every single day. They just jump into a trade without knowing why the market is moving or where the market is going. And that's why they keep getting dropped halfway. That's why, they keep getting stopped out. And sometimes with nothing left in their account. And this is really important because trading is not about luck. It's about clarity. Clarity comes from two main things: understanding the current market conditions, technical, fundamental, sentimental, anyone, and knowing when to step in and when to step back. We've just talked about the economic calendar. I've given you a brief on it. It's like the Google Maps of trading. It shows you where the traffic is, where there's a roadblock, where you can speed up safely. So why do traders have drawdowns before they even start? They jump into trades without knowing the market context, without understanding the condition of the market. They react to price movements instead of understanding it. So when you look at these key levels, you don't just go before the market. You wait for the market to act and then you react. And they also ignore news events that can change everything in seconds. But you guys understand how the economic calendar works now. So I believe you'll be able to combine that with your technical analysis and improve your trading. So what is clarity before entry? Clarity before entry is knowing the reason behind price movements before entering a trade, understanding the current market environments, the trends, the news, the sentiment, and having a plan for both directions before taking a position. It's like having a magnifying glass over your charts. And what tools do you need for clarity? You've heard this before: the fundamental, the technical, and the sentiment analysis. The technical analysis, or let's start with the fundamental. The fundamental analysis is like your news radar. You know, it keeps you aware and informed with the events that can shake the market. This includes economic calendar, interest rate decisions like the CPI. You know, you get informed. The technical analysis shows you where the market is headed, the key price zones, you know, the trends, supply and demand, support and resistance, breakout, reversals. If the GBP, just like I showed you guys, GBP JPY right now, trading at resistance, right? Let me show you guys that. All right, so you can clearly see GBP JPY is currently trading at resistance, and you know that if the market is trading at resistance, you know not to just rush in to buy, because if you buy here, you'll be buying at the highest point, and you know how they say it: buy low, sell high. You don't want to buy at the highest point. You don't want to buy when it's at its peak. You want to look for opportunities at the low to buy and make profit. Then we have sentiment analysis, which is more like the mood detector. It tells you how traders feel, how investors feel. You know, you can even use the dollar index, the strength or the weakness of the dollar index, the mood in stock markets, the demand for gold, to identify what's going on with the markets. All right. So what's your daily clarity checklist? And you can use this every day to just keep you in the know, to keep you informed with your trading. Check the map, draw your levels, right? Look at the charts, identify important levels, use the economic calendar as your news reader, and take note of the events that can move your pair. High impact events can bring about volatility. And before you buy or sell, have a plan. I gave you guys a framework. I hope you would remember that. I gave you a framework: market structure, key levels, predetermine, risk management, even before you enter the trade. Now, if you understood all this, let me know in the chat. Having these tools may not guarantee 100% profit every single time you trade, but without having these tools, losses are guaranteed, because you need to have an edge. You need to have a system. You won't be trading based on luck. It's not a consistent way to trade. So if you've got questions, please let me know in the chat, guys. And if you haven't already, you can go ahead and download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions, guys. Zero commissions, zero swap. You can hold your trades overnight for 5 days and you won't get charged. It also has various educational resources like this one you're coming on, and other Forex articles and books and videos that you can read, watch. 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it this far, congratulations. This is the promo code to 100% bonus on your deposit: Ambrose E100. So you can open the Octa Trading app or visit the official website. Go to your profile. If you're using the app, you can go to the navigation section. You would see promo code section in the menu. You can enter the promo code Ambrose E100 and click on activate. You can make your deposit and you would get 100% bonus on whatever you deposit. You would also see the amount of volume required to trade to withdraw your bonus to your bank account or to your trading account and continue to trade more for more potential profit. All right, questions, guys. If you have any questions. If you've got questions, this is the time. How do I identify the BIBs on Octa platform? What do you mean by BIBS? And how does lot size works? I'll just give you a brief explanation on lot size. So we have the standard lots, we have the mini lots, and we have the micro lots, right? Now the standard, let's increase this so you guys see, is valued, or let's start with the micro lots, right? The micro lots consist of 1,000 units of a currency or in buying power, all the way up to 9 units, 9,999 units. So what this means is if you use 0.01 lot size, where you have the volume, the lot sizes can still be called volume on your charts. You're buying 1,000 units or you're selling 1,000 units of whatever it is you're trading. And then you have 0.09. Right? And then the mini lot is 10,000 units. And that's where you have 0.10 or 0.10, 0.99. And obviously this would now be 99,000, or you can just keep it at this. So you're buying, if you use 0.10 lot size, you're buying 10,000, you're buying or selling 10,000 units of that currency, right? And then the standard lots would now be 100,000 units identified as 1.0 upward. So if you use 10 standard lots, obviously you're buying or selling 1 million units of that pair. This is just a brief introduction and brief explanation to how lot sizes work. If you use 0.20, right? Let's say you use 0.20, then that would be 2 mini lots, which is also 20,000 units in buying power, right? I'm going to throw the question in the chat just to be sure you guys understand what I've been explaining. If I want to buy, okay, let me keep it straightforward. If I use 0.39 lot size, right? 2 questions. How many units am I buying and what lot size is that? What type of lot size is that? How many units am I buying and what type of lot size is that? Let me know in the chat. The promo code is Ambrose E100. If you missed it, it's right here, Ambrose E100. All right. So back to the question. If I want to buy or sell with 0.39 lots, what type of lot size is that and how many units am I buying or selling? Let me know in the chat. Since you guys don't want to ask me questions, maybe I can ask you guys. 0.39. Let's take this off. 0.39 lots is what type of lot size and how many units? Let me know in the chat. .39 lots. This is a very short distance for 1 minute time frame, but well, scalpers will take advantage of it. It's about, it's not so much, but yeah, just if you wanted to capitalize on low time frame zone trading strategies, GBP is bullish, or you can just wait for the pullback in the zones that I gave you guys on the high time frames and capitalize on it. But GBP is pretty bullish. Okay, John says mini lots. Prince says mini lot and 39,000 units. Honor says mini lots. Amazing, amazing. The answer is mini lots, and it is 39,000 units. All right, guys, we've come to the end of today's amazing session. We value your feedback. Please take a moment to fill out our survey. Your feedback is essential for us to improve our future webinars. It's going to take just 1 minute. You can scan the QR code or you use the link in the description to fill out the survey. And before I go, I want you guys to remember something. Trading is not about, just profit every day. It's about building the skill to keep you profitable years from now. There'll be days where you'd have drawdowns. There'll be days where you could feel like, it's not really working out. But there could also be days where you question if you're even built for trading. But those are the exact moments that shape you as a trader. The market doesn't reward speed or, luck type of trading. It rewards discipline, patience, and consistency. Every trade you take, every chart you study, every pair, every mistake that you learn from is putting you one step ahead of the version of you that would want to give up. So don't just show up for the wins or for the profits. Show up for the growth. All right? Show up for the growth. Thank you guys for joining today's session, and I'll see you in the next one.